Hello traders, Gary Wagner here, approximately 10:45 in Honolulu, 4:45 in New York, Wednesday, 22nd day of August 2018, and this is the daily report for gold and silver. With the exception of silver, we did see the precious metals complex close higher on the day. Gold about $2.40 and currently tracked at $12.0240. Platinum also gaining on the day, gaining $1.40 at $7.94, and palladium gaining almost a full percent, up $8.60 at $918.60. As I said, silver was the only exception to the rule today, losing about 3.5 cents, trading at $14.73. Now, that all occurred in light of a continued weak U.S. dollar. Currently at 95, it was trading slightly below it, but it is currently down 15 points at 95 even, and that to me is a very critical level. In terms of equities, we had them modestly lower, 88-point decline in the Dow Jones Industrial Average, 25,733. Although the NASDAQ Composite did close higher, gaining almost 0.4% at 78.89, and slightly lower in the S&P. I'm going to put this in the unchanged column at 28.61. Traders, we are looking at a daily chart of December gold futures, and today's price action, while it was modestly higher, it does have a doji that formed, which is definitely showing us some indecision in the market. Before I go ahead and uncompress this chart, I just want you to see this new data set that I have put in terms of a Fibonacci retracement. It begins at 1369 and takes us to these lows that we saw come in a week ago Thursday when the market traded as low as approximately 1167. When we blow this up, we can certainly see the activity that occurred today as forming this doji right in here. However, I do believe that we will see higher pricing in gold, and I believe that the first real area that will offer some resistance is a band between 1213 and 1218. Now, this particular price point that I am expecting some potential resistance is created from two distinctly different fib retracements, one being our long data set, which really begins at the end of 2016 when gold was trading at 1124 up to these tops at about 1300. Of course, the second one we just talked about is from 1370 down to 1167. And we do have the 23% retracement and the 0.618% retracement in approximately the same price point, roughly $5 apart. The other thing that we can absolutely see, and to fit all of this data into a chart, I have created a 2-day chart rather than a single-day chart, as you can see up here, and that's why these candles look a little bit different. But we really had a distinct area of support in the marketplace at around 1213 for pretty much the entire month of July and the beginning of August before we had this tremendous fall from grace and the market broke below not only 1213 but broke below 1200 and traded as low as 1167 before recovering. My sense is that the dollar continues to weaken, and we could in fact see gold track higher. Of course, we are long a gold position. We are in at 1199.50. Market's currently at 1202.30. It is our stop that I am hoping to move up relatively quick because it does expose us to some risk on this trade, but I have it just below 1178. Really the only logical place to put it at this point to account for recent lows in the market. And traders, although the dollar index is back above 95, it's at 95.005, so it's pretty much precisely at 95, we can see when we draw a straight line across that this is an area that was a former area of resistance and I believe could be an area of support. Well, we will have to see if the market itself breaks below this price point, once again returns to an area of resistance as we move down. If in fact we see that happen, my target is going to be about 94, and that is based upon a 38% retracement, and this of course is a long data set retracement that we are looking at. So I am expecting a further decline in the US dollar and some firmness in the precious metals, specifically gold and palladium. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.